Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. We are joined by Bloomberg's Valerie Teitel, and the stock getting the most attention, I gotta say this morning, Val, Google parent Alphabet. Looks like the company delivered for investors. Good morning.
Yeah, they did. And it's one of the stocks that's up this morning in the pre-market trade. Go Google. Alphabet is up 4.7% after the sales beat estimates on Google's search ad business. They reported first quarter revenue and profit that exceeded Wall Street expectations, driven by search advertising. Their cloud business was also strong and operating margins came in better than expected. Alphabet remains heavily invested in AI, boosting spending on servers and data centers, and CapEx continues at a healthy pace. So good news all around for Alphabet. Those shares are up 4.6% in pre-market.
So good news for Alphabet. Not so good news for Intel.
Yeah, Intel on the downside, down 7.5% so far in pre-market trade. This came after they reported earnings after the bell yesterday. Revenue forecast for the current quarter came below analyst projections, and the company warned of a tariff-fueled recession that could hurt chip demand. The CFO said the current macroeconomic environment is creating elevated uncertainty across the industry, which is reflected in our outlook. Intel also did confirm our earlier reporting that it plans to cut management jobs as its new CEO attempts a turnaround. The company does plan to reduce operating costs this year and next year, and will cut spending on new plants and equipment to shore up its finances. So Intel, a little bit of bad news there. Stock is down 7.5% in pre-market.
And we have more earnings just this morning in the pre-market. We heard from Colgate-Palmolive, those consumer staples companies who are getting so much attention around the trade war.
Yeah, a little bit of good news here. They came in with the beat on their first quarter adjusted EPS. Reading through some strong comments from the CEO in this initial interview, that the share is up around 0.8%. Doesn't sound like much, but the broader equity market is down nearly 0.5%. So it is outperforming on those earning announcements.
And we've got T-Mobile on your radar as well.
Yeah, this one's to the downside. T-Mobile down 5.6%. This was the last of the big three telecoms to report. They added less subscribers than expected. The firm coming under pressure from rising competitions. Didn't come as bad as Verizon that actually lost subscribers. So they continued to add them, but just less than expected. Let's see. It seems like AT&T has been the winner this earnings season, with the only one to report better than expected subscriber numbers. Verizon, T-Mobile falling behind. So T-Mobile falling 5.6% due to increased competition.
And yet another company pulling its guidance, and this one is Skechers getting punished in the pre-market, Valerie.
Yeah, definitely. Skechers falling 7.3% in the pre-market. The company withdrew its full-year outlook, citing macroeconomic uncertainty stemming from global trade policies. The latest company to pull their full-year guidance. We also had American Airlines pulling their full guidance yesterday. The company also did report first quarter sales that disappointed expectations, so that was also a disappointment. So Skechers down 7.3%. We're also seeing some other retailers fall off the back of this. Nike is actually down 1.2%. So keep an eye on retailers as the market opens.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.